I think we don't really see imminent recession risk for the Singapore economy. I do think that the official forecast of 1 to 3% is quite comfortable. Our house view is for around 2.2%. This does factor in some slowdown in the global economy, mainly because of the tariff war that's coming up. But I think we do see that the engines of growth is actually still present. So manufacturing, although it's a little bit bumpy and is showing up in the January NODX numbers, but some of that, of course, is due to the Chinese New Year holiday season as well. So the front loading is probably going to subside a little bit, but nevertheless, if you look at the other pillars of growth, which is really on the construction side, public infrastructure works is very, very strong. And on the domestic side, the labor market remains fairly resilient. So while there may be some slowdown in terms of domestic consumption, I think there should still be some support for growth going forward. So we really don't see a downturn in the Singapore economy, although it may be a little bit bumpy in the near term.
Ms. Ling, JP Ong here. The Prime Minister did highlight that there's considerable uncertainty surrounding their revenue projections, which they're expecting to grow by about 5% this year. I am curious, though, because apart from these reciprocal tariffs, the Trump administration has highlighted that they're also looking at value-added tax and equating that to possible tariffs. And as we know, goods and services taxes actually come in as the second source of revenue in terms of tax revenues for Singapore. How concerned are you and some of your colleagues in the economic front about whether or not this might be put at risk? And can Singapore actually find other levers if the worst happens, where perhaps goods and services taxes are perhaps trimmed or perhaps impacted? Because while corporate income taxes are the biggest source, this might be arguably also one of the bigger risks actually in terms of tax revenues for Singapore moving forward.
I think no one in the world is actually immune to reciprocal taxes if the US wants to push on this agenda. I think in Singapore's case, we do have a free trade agreement with the US. I think more importantly, we're actually running a trade deficit with the US. And we have very strong economic and security ties with the US. So possibly that's a silver lining in the short term. We do say never, but I think in the near term, I do not expect that Singapore will be in the initial list of targets. I think going forward, of course, is that given all these upheavals on the external environment, the question is, how does a small open economy like Singapore actually buffer itself against some of this volatility? So I do think that, if, let's say, manufacturing or trade takes a little bit of a nosedive due to some of these reciprocal or other kind of tariff measures, the question, of course, will come into the issue of how stimulative can domestic policy settings get to. We have already seen MAS basically ease its monetary policy in January. I think they will be quite open to another easing when the April review comes up, mainly because core inflation is subsiding. And I think, as I said earlier, on the fiscal side, there are quite a few buffers. There are some levers. We are starting with a fairly strong fiscal position. And I think if necessary, they can probably do what they have done in previous downturns, which is really to give a little bit more assistance to both households and corporates, and also do some pump priming as well.